All right, here we go with liabilities. Now, liabilities is the first part of claims. Remember, assets equals liabilities plus equity. Liabilities are the things that we owe. By definition, these are the amounts owed to others relating to loans, extensions of credits, and other obligations arising from the course of business. Again, layman's terms, it's what we owe. If we owe something, it's a liability. If we owe something to someone or another business, it is a liability to us. Examples of these. Now, you're going to notice a very common theme here. Accounts payables, notes payables, salaries payables, and then we have this other one that's called unearned revenue. Now, payables is the commonality there, obviously. And that is the counterpoint to receivables. So again, if you ask yourself that question, what are we expected to do with this cash? If we're expected to pay it at another date, then it's a payable. If we're expected to receive it, then it's a receivable. That's an easy way to remember both of those, receivables and payables. Payables are what we're expected to pay. Receivables are what we're expected to receive. Then you have this other thing that's called unearned revenue. Unearned revenue is the product or service that we're expected to pay back later on. So somebody gave us money up front. I want to go back to an example that we did a while back when we talked about revenues, and I gave you those 3 scenarios. And the third scenario we talked about was, you give me the cash up front, but I don't have the PIN. I owe you that PIN next week. I said that's not a revenue for me because I haven't done anything to earn it. I still owe you that product or that PIN. That's what makes it an unearned revenue. I haven't earned it yet. And the moment where I do give it to you, then it comes out of my unearned revenue account and goes into my earned revenue account. That's where we come up with these names. We're real creative with our naming and accounting. Again, payables are a liability that promises a future outflow of resources. So that's all the liabilities we're going to talk about here. Appreciate it.